Hello, everyone. This is Mortgage Mark here today with Wayne Sanford. Wayne, as I know him, Wayne the credit guy, but he's with Credit Bureau Investigations. Wayne and I, you've known each other for, we think, somewhere in the early aughts, 2003, 2004.
You know, after a decade, it's been a while.
It's been a bromance since then, guys. So from a mortgage standpoint, we've been using Wayne exclusively for the last decade. Anytime somebody has any credit questions, any type of, and I've been told back in the day, it's supposed to say credit restoration, not credit repair. Is that true, untrue?
The terminology, credit, we do credit management, we do credit restoration. It's at the core, you can just call it credit repair. It's okay.
Fair enough.
It's not going to offend anybody.
Like when I first got in the business back in 2003, they're like, you can't say credit repair. It's credit restoration. We're fixing it. We're not manipulating it. I was like, okay, it is what it is. So Wayne, give me a quick example of what you do, or give the listeners a quick example, because I know I send folks over to you that have credit. They want to improve credit in some form or fashion, whether it's make it more accurate, improve the scores. Tell them what it is you do with your company and your magic.
I mean, well, overall, it's whether it's minor challenges. Hey, I just want a second eye on this. Do you see anything I don't see? Major challenges, just a range of different things. Obviously, you'll send reports over just to say, Wayne, do you see anything that we don't to help improve the score? But, I mean, overall, I've been doing this for a little over 17 years. I think we've identified that I analyzed about 24,000 credit reports in that time frame.
Oh, goodness.
Background-wise, wrote a book, been on radio and local and national TV, all of that stuff, as I call it. You guys deal with a lot of real estate agents. They have to be licensed by the state of Texas, and they have to take continuing education classes like a lot of industries. I'm actually one of those educators for the state of Texas with TREC. I've been one for a little over 10 years now. Like I jokingly tell everyone, I'm very blunt, very direct, always polite. But just, with your loan officers, your real estate agents, I tell it like it is. Listen, this is the trouble. This is the problem. This is how we fix things. This is how we get around things. This is how, okay, now I'm done. Now it's time for some mark magic. And we go from there.
I will say my script, if anybody's listening that I've introduced to Wayne, it is Wayne's a New Yorker. He's going to tell you the way it is. He's not trying to be your best friend, but he's the best darn credit guy I know. He will get it fixed if you listen to him. I always qualify that. They got to listen to you.
Mm-hmm.
It definitely helps.
I have to imagine that's got to be the toughest part of your job. So tell me this. I know for me to talk to somebody I know when to refer somebody over to you because I need their scores higher, either to qualify or better rate. How does the general public know when to come to you?
Most of the time, people don't. Everyone knows credit's important. I mean, it doesn't take a rocket science to figure that, but no one ever truly knows how important it is till they're told no when they're trying to get something. And then, like I usually tell everyone, well, then it's too late to get that right now. So it never hurts to, periodically check your credit, but then people go to Credit Karma because God knows they advertise everywhere, and people don't understand all the different variations in scores. And they look at Credit Karma and it says, oh, I'm a 670. Fantastic, I can get a house. And then you pull a mortgage lender score and it turns out they're 550. And then they don't understand. So one of the main things I like to do is just truly educate people to give them, you don't have to be a credit expert, but here's how the basics works. Here's what you don't understand that you need to understand.
And what's the general timeline do you think it takes to fix something? So I want to buy a house in the near future. I'm getting ready. How long before when should they contact you? A year?
I always tell people you always want to give the credit guy more time than less because the bureaus, my personal opinion, of course, they don't play fair. Creditors and collection agencies, God knows, don't play fair. There's always mistakes, quote unquote, on a credit report. And in the 17 years I've been doing this, I've actually never seen an error happen with the benefit of the client, let's just say. It always works against the client. Now, whether or not that's truly an error, because after 24,000 reports and God knows how many trade lines in each of those reports, you would think there's an error. Oh, wow, this is actually bad, but it's helping you because they did this accidentally. We don't see that.
Right.
But I would say at least 6 months, but of course it's going to be dependent on the score. A credit report's like a thumbprint. Every thumbprint is different. What works for person A doesn't work the same for person B.
And I know what I'm about to ask isn't fair, but how quick can you fix something?
Totally unfair. Well, I mean, you guys have called me in the past where you're getting ready to close in a week or so, and all of a sudden something happened and you're under 5 points away. We've done some magic where in 2 weeks they're ready to go.
Right. And
but if they're 50 points away, hey, Wayne, we're closing in 2 weeks, I go, probably no.
And typically, that just to qualify this for those at home, when that is asked to do that quick turnaround, we know it's wrong, we know it's inaccurate, we have the proof in hand, and it's just jamming it through. Am I right?
Correct. But at the same time, too, depending on the item involved, you are still sometimes bound between, because 98% of what I deal with, we don't control. Just like when you guys have a customer and you say, okay, in order to move forward, I need these documents. And they wait 3 weeks for them.
Right. Right.
So, and they're wondering when they give you the documents and then 2 days later, why aren't you done yet? Well, because you needed 2 weeks to process the documents. So that happens all the time. So have we pulled off some miracles? Yeah, without a doubt, a lot over the course of the years, but I'd rather not put myself under that kind of stress.
Wayne, the miracle worker.
Yeah.
Ballpark me on cost.
Credit repair range is really from a range. I've seen companies charge $500. I've seen charge $4,000. I'm kind of in the lower end middle where we charge pretty much $1,500, but I have a sliding scale. Last week I charged 2 people $500. I'm going to look at the report, ask some questions, assess the amount of damage that I'm dealing with, and then at that point say, okay, here's what I can discount this to, and then here's the payment plan we have set up for you.
I also like that you'll tell people no. I've had people call me back and say, Wayne says it's not worth it, don't pay him.
Yeah.
Right? There's certain things you can and cannot do, and you can't, we joke about the miracle worker, but you can't just go fix accurate, bad information.
And at the same time, too, there's some of those items are actually going to red flag everything for your underwriters.
Right.
And it's just, I don't pay for advertising. I'm strictly word of mouth, and especially after 17 years. I don't take someone's money if I don't think I can help.
Well,
because it's just a future headache.
When people ask how much does he cost, I say he's way less than paying a higher interest rate for 30 years. That's my answer.
I should start using that.
Yeah, feel free. So again, Wayne, thank you again for that, and thanks for joining us today. You've heard some laughing here on the side with Miss Riley, who's with us.
Me.
Riley is a novice when it comes to credit, I presume. I'm making an assumption based on age and stage of life. But Miss Riley, what questions do you have for Wayne?
So I'm going to be a little bit all over the place, but I'll try to keep as a millennial standpoint, I guess. I'm not even a millennial. I'm going to pose as one.
What are you, by the way?
Gen Z.
Oh.
But I don't associate with Gen Z like the younger, I feel like. But I'm also not a millennial.
What's the oldest Gen Z member?
Ooh.
I don't even know.
Is
Maybe
it bad?
me?
I don't even know the qualifications for Z, Y, X, J, millennial.
Well, for millennial, I think it's like 25 is the youngest. So,
is that right?
Yeah, and so
Okay.
I don't make that cut. So, for the millennials and Gen Z people out there, I just finished up school, and so I'm going to start paying back student loans soon, which I know a lot of people my age are probably in that bucket. What does that look like when it comes to my credit? How do those student loans affect my credit? And then also as they were coming in, when I was applying for a loan, are those individual hard hits, or are those all together now going to hurt me now when I start paying it off?
Great question.
Sure. Okay, so when it comes to good credit, there's really 2 types. There's revolving and installment. And
Okay.
the definition, it's really easy to understand it. And definition of installment is a dollar amount divided by time frame. Car
Okay.
payment, student loan, mortgage, every single month. Okay. A lot of times the way the student loans work, which I cannot stand, is they'll break it down into, you may look at, depending on what school and how long you went for, you may have 15 trade lines with student loans. If your score's already decent, meaning 680 plus, one of the things I would do is reach out and then consolidate them. Because if you forget or something happens and you mess up, you get 9 derogatory hits on all of them.
Every single one.
Every single one. Well,
Oh my
each
God.
one
Yeah.
is now
You don't
60
come back
days
from
late.
that.
It doesn't get hit as bad as a revolving credit card does, but number one, it doesn't look good. It's
Right.
aggravating just to look at.
Right.
So it's easier to just consolidate that. That's
Okay.
number one. And then when you graduate, they automatically give you a 6-month waiver where you don't have to pay anything,
Right.
where you can then at least kind of get your footing and get settled. But that's where you want to do that consolidating.
Okay.
And then, honestly, if you're just starting your job, I would ask them to discuss what's called an income-based repayment plan. So let's just say you're getting an entry-level job and it's not paying what it will once you have 3-5 years worth of experience.
Right.
They will you'll put together a little financial package. How much are you making? What are your monthly bills? All that fun stuff. And then they'll say, hey, instead of our $500 a month, it's $100 a month.
So am I coming to you to get that package?
No. You're
Okay.
going directly to them, but people call me and then I direct them and just say, you don't need me. This is what you need to do.
Okay, so when I am going to, I'm in that period right now, that 6 month waiver period. So
Tick, 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 tick.
yeah, I just recently have been kind of getting into it and worrying about it a little bit more than I probably should be, or I need to be worrying about it a little bit more. So that kicks around January. So if I go ahead and consolidate those and kind of see if I can get it lowered down, because you're right, like with the entry level job, you may not be hitting those tick marks with that, because it's quite expensive to pay back your college loans when you have like $30,000-$40,000 of debt. So that was my big question about that. And when
Does she consolidate during the deferment period, or do
Yeah.
you wait till payments come due?
She could actually do it at any point.
Already?
Now, they're going to base it off a credit score. So that's why if you have at least a 680 credit score, then yes, now it's worth it, because you get typically a better interest rate.
But with that though, so my sister, just for example, she used her
Why
income.
did you wink at me when you said your sister?
I don't know.
I'm
No,
just
kidding.
teasing.
So she actually filed separate, like married but separately, to get hers to go down further, because they were going to make her pay an absurd amount of money. So in that situation, she could have done like her income based.
Correct.
Okay, so that's where she probably did that then, because they were going to charge her an outrageous amount of money, and I knew that if that was my future, I was just going to go ahead and lay in my deathbed and.
Yeah, and this isn't actually a life hack I'm about to give. And
Okay.
This is just the government at its finest. Let's just say you just graduated and you want to set this up and you're still looking for a job. You could literally call to consolidate and then do an income-based repayment plan, and you'll qualify because you're making no money, and it'll be $0 for the first 12 months.
Okay,
Yeah, I've seen that happen before.
Riley,
it's
don't
just,
quit
it's kind of
tomorrow,
crazy,
please.
but I don't suggest you do it because it's
No.
still building up. But you
Right.
know, a lot of times life happens, and if you don't know, it's like the law. If you don't know your rights, you don't have any rights. If you don't know your options, you have no options. And a lot of times I get random questions from people finding me on the internet saying, "Hey Wayne, here's my situation. Is this something you can help me with?" And I'll say, "Well, no, but this is what you got to do."
So when you say trade line, that's a credit line?
Correct. Anything on your credit report that you look at and you're like, "Oh, that's that account," that's considered, the terminology is a trade line.
So when you say those 9 hits, what is that?
Sure. Let's say you got one student loan was $3,500 for one class, different semester, maybe the year, that kind of thing. If you forget, now the good thing about student loans is most of the time they don't report 30-day late payments. A lot of them don't even report 60-day lates, but they hit you at 90. And they're very good at following up, emailing you, contacting you, sending you letters. So you can't go, "Oh, I didn't know, they didn't tell me." That means you're lying. And I tell people that all the time. It's like, guys, I'm not 18. I'm not the guy you lie to. I'm the guy you say, "Wayne, I screwed up. Please help me." And then I try to figure out, and I jokingly say, "Where there's a will, there's a Wayne." I'll figure
Love
it out.
that. Love it.
I do love that.
Been around long enough where we can figure stuff out.
So they're a little bit more graceful, or I guess like when you're versus a credit card with student loans, you have 90 days. Okay.
No, with credit card, you're late 30 days.
30.
Boom, 30-day late payment. You could possibly drop, depending on your score, anywhere from 50 to 100 points.
Is the 90-day for everybody, no matter your age, your credit score, or anything, as long as it's student loan?
For student loans, like I said, there's a lot of them that do 90 days, but some do 60.
Okay.
They'll actually inform you in the paperwork, but no one's going to grab a magnifying glass and read that. So it's always easier to call them and tell them.
Especially
Just
people
don't
my
miss
age.
the payment.
Right. But let's just say you forgot.
Yeah.
You were supposed to follow up. Life happened, whatever the story is, yada, yada, yada. And then 90 days hits. All of a sudden, every single one of those accounts will report a 90-day late payment.
Scary stuff.
So
Thank you
does
for
it
that.
matter where you get the student loan from? Like federal debt versus private, or I don't even know what I'm talking about, but I do know that's a thing.
Yeah.
Well, private debt, let's put it this way, government debt's not going away. You can delay it, you can push it off as much as you want, because they know you can't discharge it in bankruptcy, you can't get rid of it. If you don't pay it when you're earning, you're like, "Oh wow, I'm getting $3,000 in my taxes back." No, you didn't. They just got a $3,000 payment from you, because it'll be taken from your check, from your tax returns.
Got it. So that's the student loan download.
Thank you.
Riley, any other questions?
That was it for student loans, I think, for that part. That's my big rock right now. I'm having to cross over, and I really just needed some clarity on that.
Well, just before we actually started recording, I hit you with the question. Now, how old are you again?
23.
Okay, so I hit you with a question, and you gave me the deer in the headlights. So we thought it'd be good to mention it during the course of this. And because, again, the first time I heard about credit, which was, we'll just leave it as a while ago, and I went to go check something, and then all of a sudden it's like, hey, Wayne, your credit. Oh, let me take a look. And standard phrase was, geez, why is that not higher? What is that? Where did this come from? And I asked you, when was the first time somebody said, well, we can do this, but what's your credit score?
Never.
Cell phone, maybe?
I'm
throwing out an idea.
No, honestly, no. Just because I'm on my parents' cell phone plan and I'm getting kicked off now after college. But when you ask me, I'm like, oh gosh, I don't think I've ever been asked that ever.
When I've done some seminars, I used to tell the kids that were under 18, I was like, guys, once you turn 18, congratulations, you're an adult, which gives businesses the opportunity to screw you over every single way possible. And when you're younger, you're more emotional. If you're having trouble with the cell phone service and it's not working and they go, well, sorry, we can't do this, or we can only do this, you're going to go, well, screw you. I'm not going to pay you now. That's probably what I would have done, because if I didn't know any better, but no one realizes that. They're like, okay, fine, it'll just go to collections, damage your credit, and we'll get you eventually. And it's just, you just don't think about that because you haven't had that life experience to slap you just yet. And it's better to get slapped now at 23 maybe than 43.
For sure. That's where I think I'm at.
Not that I'm condoning any sort of slapping.
No slapping around here. So where should I have been first asked? Like, who should be asking me about my credit if it's not through my phone, through my phone bill, provider, car, if all of that's already been taken care of prior to my parents paying for it and dealing with all of that, where should I have been first hit up with the question of what's your credit score?
TV commercials. But let's mention something that we can segue into Mark's area, which is there's different types of scores. There's different credit models. A credit score is technically called a risk score. Because if you think about it, what the heck is a credit score? It's a 3-digit number that tells a lender how you pay your bills. Okay? So you go to Credit Karma because the commercials, there's just so many.
They are everywhere.
And they actually use something called a Vantage score. Most people just see credit score and they block out everything else. Well, they'll go see their scores. Well, you go directly to Experian. I'll go to the Experian. That's the credit bureau themselves. Well, that's a consumer score. No one's lending you any money. They're just saying, hey, here's a general idea where your scores are at. And then you go to your credit card company because you look at your credit card and you're like, oh, the credit score is good. I'll go apply for this credit card. Well, all of a sudden you get denied. And they say because your credit score is too low. And then you see what your credit score is and you're like, well, that's not what the other company told me. You go to a mortgage company like Mark, or even a car, they do lender scores. They're going to basically go to the credit bureaus and say, hey, here's a young lady that wants to get a car from us, get a house, whatever it is. We've got a little model that we put together. We think this information is worth this many points. This information is worth that many points. Hey, credit bureaus, please dump the information into the bucket so it spits out our industry credit score, and then we'll decide if we want to do business with her. That's a lender score.
So it's always not going to be accurate from what you're reading versus what it's going to be seen.
It confuses the heck out of people left and right. And then I can mess with you a little bit more and say, okay, well, which lender score are you referring to? You're referring to FICO Model 2, 4, 5, 9, 8, 10, So it gets a little crazy. But it's just, people just need to understand, like real estate agents, when we do the TREC class, the first thing we'll ask a real estate agent is, guys, you don't want to waste your time, let alone gas money these days. Ask them, where did they get the credit score from? When they tell you Credit Karma or Experian, just say, well, no, we can't use that one because that's a consumer score. We need to send you the Mark. Mark's got to pull a mortgage credit score so we know what the mortgage company thinks your score's at. Because that score is going to be made up of different points and percentages than what I'm going to see on my credit card app. You're going to see on the credit card app, or like, let's say Capital One with their CreditWise, with their TransUnion. I don't know, I don't have one, but if it says, okay, here's your accounts, it might list the accounts. There's not going to be the detail that there will be in a mortgage score, or you may just get some general, here's the account, here's the dollar amount, what you current out. So a lot of times, understand in life, you get what you pay for. And how much is Credit Karma? Free. There's a reason for that. Yeah. So while it's helpful, don't get me wrong, sometimes they're not being deceptive, but it's just everything is so specific that you don't know until you know.
So how does Riley stay on top of her scores? Where do you recommend she check them and how often?
Sure. I honestly like Credit Karma for specific reasons. Turn on the notifications. If there's something good or bad that happens, they'll send you a notification. Riley, congratulations. You finally paid off that credit card that you maxed out. Hey, Riley, you just did this. Hey, Riley, there was an inquiry that just hit your credit. Did you do that? So it's excellent for keeping you updated almost on a weekly basis. Score, not paying so much attention, but if your score keeps going higher and higher, well, then that means that with other lenders, obviously it's probably continuing going higher. Yeah.
So they're basically going to monitor it for you.
Correct.
More so like a personal credit assistant.
Yeah, and you know, they try to sell you everything else under the sun when you log in, but that's the business. That's what they do. They're teasing information to be able to see, hey, do you want to try to apply for this credit card? Click this button here, because if you get approved, we get paid.
So everyone needs to know to just X that out of that. Don't trust them with that.
Don't trust the scores.
Okay.
You can trust the information because they're getting it from the credit bureaus. I just would not rely on the scores.
What do you see for the differential between the consumer credit scores and, say, a mortgage credit score?
It's going to range. There was typically, I'll see maybe a 40-point difference.
I say 50,
one
so
guy
I'm just making sure we're on the same
points.
page.
One guy saw 100 points, the only one I've ever seen in probably 15 years.
Wow.
But again, it's going to be different data, different person, different report. That's just that. But yeah, the typical is 40, 50 points, give or take.
I tell folks 50. It's easier math.
It's safe. It's a safe number.
About 50 points lower when you pull a mortgage credit report versus what you have.
Yeah. Now, if let's
crazy.
say you go to Credit Karma and you see that you're a 750, you're going to be over a solid 680 mortgage or car score anyway. So those are going to be good rates you'll get.
But Wayne, I paid my credit on time all the time, and I still have a low credit score. How are credit scores derived? What makes a credit score?
Funny you asked that, Mark. No. A credit score, ultimately, it's two major components. You know, and this is some of the things that I know we got to talk about this, but it just drives me nuts. You see so many articles that come out. It's like, learn the secrets of a credit score. And it's the same 5 basic, boring things that I want to bang my head against the wall. So just understand that paying your bills on time is good. Not paying is bad. That's worth 35%. Okay. Then they go, okay, now that we know you're paying on time, how are you using the credit cards? Are you going buck wild and crazy every month, even though you're paying them? Or do you act responsibly and only use them a little bit and then pay them? And then that's worth 30 points. So just those two components alone for your overall score is 65%. Now, the analogy I give, since I'm moving my hands and people don't know actually what I'm doing, think of a roller coaster. So think of those really big roller coasters that go all the way up, all the way down. That's you maxing out your card every month, but you pay it off at the end of the month. Most people have the thought process of, well, I'm paying it. What's the problem? Would you think that that's a big deal?
I would say roller coasters are fun, are they not? I just am thinking about your hand moving. I'm like, what's wrong with that?
Well, it is fun, but unless you're scared of heights. But a credit score is that risk score. So while you're maxing it out, but you're paying it off, and you think in your own head, which is very logical, I'm paying it off. What's the problem? And there's nothing wrong. But since it's a risk score, they have to say, well, what happens if you're maxed out up top at the top of the mountain or the roller coaster, and now you lose your job? That's a risk score. Now, if you have all of a sudden, but you're driving in a parking lot and there's just those little annoying bumps, which are seemingly huge, but they're really not compared to a roller coaster. Well, that's you using your credit, paying it down or paying it off and paying it low. And just so it's a really slow moving, almost like a wave. Well, if you think about it, up and down, really sharp, or slow and steady, what's going to give you more points? Using your credit, but not overusing your credit. Now, you see the standard thing on the internet that says 35%. Don't max out your cards any more than 35%. It's good general information. From a mortgage standpoint, they really like 20%.
What are those thresholds from a mortgage perspective? 20%, 50%, 75, 80?
I mean, anything over 35, you'll start seeing point problems.
And then where's the next tier in
40,
your experience?
35, 40, 45. I mean, it just literally just ticks up. Yeah,
okay.
It literally ticks up every 5 points. But typically, if you're about 20% or a little bit less, you're not. I mean, there might be. I've seen some people. I have a Capital One business card that reports on my personal account. If I start going a little buck wild and crazy on that one, if I came close to maxing out like I did one time way back, I dropped 100 points. Now I'm an 800 plus credit score, but still, you don't want to see 7 when you're 8. And then, but once I paid it off, it went right back because it's a math equation. It just recalculated back to where you were originally. So some files are going to be more affected by a credit. So it's going to be more affected by credit cards being maxed out than others. If you just started getting credit, like, do you have 2 credit cards, 1 credit card? No.
2.
Okay, 2. How long have you had them?
1 for 2 years, 1 for 1 year.
Okay, so while it's still pretty good history for your age, it's technically, we look at it as it's a limited file. It's a thin file because there's just not enough bulk to it. Right. I have a high-end net worth client, $2-3 million a year or something like that. He's
Don't
always
talk
done
about
cash.
me, Wayne. I'm right here.
No, I wasn't going to use
Is there HIPAA
names.
for credit?
And he was such a pain. No, gentlemen always used cash because that's typically what you'll end up doing. But when all of a sudden things happened where he wanted to leverage, because your credit is the ultimate OPM, other people's money. He wanted to start leveraging that. Well, some of the cards he wanted, the credit card that gives him, points, Admiral's Lounge, and all that other stuff. And even though we had him over a 700 credit score, those companies were declining him primarily because he didn't have enough history. Now, it doesn't really make any sense when you look at the income that he makes that you'd think an exception would be made. But again, everything's computerized. They punch it in and go, yeah, nope, sorry. But it's just because lack of credit.
So with my 2 cards, even with like other, let's call them, would you call it the trade line?
Trade lines.
Okay, let's use the correct terminology. If I have student loans and then those are building up my credit line or trade lines, does that help even if I have newer credit cards?
Any good credit is good credit.
So those are like 5 years old since I was like a freshman in college. So those are obviously, they're not going to be those newer, more delinquent files or whatever. The limited file?
Limited. You wouldn't be as limited because you've gotten some bulk history. Now, let's pretend that you're a 720 credit score, which I don't even know what you are, but let's just say you're a 720. And you go, you know what, I'm getting my first car. Do you know that they will actually give you a higher interest rate even though you're a 700 plus score because you don't have any car credit?
That was one of my questions, was as a millennial or Gen Z, I don't have my own car, my own name yet, and I don't have a house, a mortgage. I don't have anything like that. So all I really do have are those lines of credit that are debt from loans and then credit cards. And so that's all I have. But the mixed bag of like having the loan or for your home loan and then having also a car credit, I don't have those. So how am I still going to build that if I am not at that point in my life yet?
Well, it's not like, let's just say, because you're a 700, you should qualify for 3%. They're not going to say, oh, sorry. I mean, they may, you never know. Car dealers, not exactly the best friend. But then again, neither does credit. So I'm kind of fighting a big tide here.
You're one of a million, buddy.
Thank you.
That's why you're the only one we refer for that reason. Not that we haven't been approached by others, but just because you get results all the time, every time. But they do what you want. But as an industry, not a good reputation.
I appreciate you coming out of your office with a shotgun when the others knock on the door. Right? No, but they're not going. Let's say if you technically would qualify for 3%, they're not going to turn around and charge you 8 or 9.
Okay, so
They'll probably charge maybe 4.5, a point or 2, 1.5 extra, which overall isn't the worst. But that doesn't technically mean you can't refinance it a little bit because the moment you have a couple of months worth of history, you now have history. And if there's a good rate drop, or credit unions these days, it seems to be the best interest rates that are out there. If you chose to refinance it, make sure you do it within the first year, because just like with mortgages and cars, they get their interest pretty much up front on the first year. So if there's customers that we have, when they got bad credit, they got to get a car, 15, 20%, which is crazy. And I tell everyone, let's just say, and I'm going to backtrack a little bit. Let's just say the car is $30,000. And they're paying 15% plus interest, whatever it is. They had the car for 1 or 2 years. Car got returned, whether they gave it or they took it in the middle of the night, whatever the story is, and they see that they only paid off $2,000. And they're like, my payments were $600 a month. I've been paying on it for 2 years. Well, if you broke it down and went to Google, typed in car loan amortization schedule, punched in the numbers, you will see out of that $600, let's say they were paying, $550 of it was interest. For the first, because the banks are going to get their money first.
Right.
Yeah.
Oh my goodness.
Oh, it's aggravating as heck when
I
you
was
see
gonna say
that.
that is so sickening when you think about it.
Mm-hmm.
Oh goodness. So me being a young person, there's not necessarily that threshold where I need to. I'm not gonna get charged 9%
No.
or something. And okay, so that's
As
a little
long
bit
as
more
you've got
calming.
a decent, yeah, I mean,
So I'm
decent
not
car.
scared to go buy a new car and then I can never pay for it and the bank's gonna get all the money. I don't have to be worried about that.
Correct.
As a
now,
younger person.
I will tell you the standard phrase because I know people in the car industry, not that you're a female, but as a young person, probably doesn't know a lot about the car selling process and how they can get you.
Oh, for sure.
Like I have a friend that I've known for over a decade, brings me with every single car. And I'm pretty much, what do you want? And I pretty much set everything up. And it's funny because the 2 or 3 times we've gone to the, to the back, to the finance people, and they sit there and they just politely, look to me and nod and then say one of the questions to me, and they look at her and they focus on her. And every time they ask her a question, she turns her head to me and I shake my head, yeah, no. And after like 3 or 4 times, the person usually figures out I should probably just talk to Wayne. Mm-hmm. And that's just, again, just because I've got so many years of experience in dealing with what she needs, what she doesn't need. And I don't know any car, finance people here locally. So her credit score wasn't the greatest, but it was decent. But her car credit was perfect. And what they ended up doing, because they tried to sell everything and she wanted everything, she just can't financially afford it in her budget. They were able to miraculously, quote unquote, lower her interest rate because of such awesome car credit, and they were able to lower it and then take that difference to get her all those products that they needed. It was amazing.
Cool.
Can you sense the sarcasm?
Cool.
All right, just checking. But at the end of the day, everybody got what they wanted. They sold their products. She got the protection. It was a win-win.
Mark?
Any other questions?
I could go all over the place, but
Go for it. Keep going. I'm enjoying this.
so this is for still, let's say on the credit card area a little bit more so, just because that is where I feel like that's my playing field at the moment, just because loans are not, the time's not up on that yet.
Okay.
But should my credit card balance ever be at 0? Should I ever pay it off completely in full?
Okay. Yes and no. When it comes to credit, there's never truly this is the one answer. Here's what I can tell you. A credit score measures payment history, right? If you get a credit card and you pay it off every single month, you're doing the right thing, right? But if the bank is telling the credit bureaus, hey, Riley's balance at 0 this month. Hey, next month, hey, it's 0. All they see is 0, 0, 0, 0. So it would make sense to carry a small balance here and there, especially on a new card, because think of it as when you first get a credit card, it's almost like there's a magnifying glass on that account. They're watching your every move. Every move you make, every charge you make, they're watching you. So if they see, and let's just say you have a $500 limit, just throw out a number, and this month there was a $50 balance. Well, that's only 10%. That's great.
Pretty good.
If you all of a sudden went a little cray-cray, and then you put it up to 400, but before the bill was due, you paid off 300 of it, or 400, or even you paid it off. The following month it was 0. Then you charged, and then it showed, so there you owed 50, 0 balance the next month. You owed 30, the next month it was paid off 0. So you're mixing it up, so to speak.
So say my statement closes on the 1st of every month, and so I pay it a couple of days before just so it has time to process, and on the 1st, maybe it says I have $50 of credit balance. So does every credit company report to the bureaus on the same day as my statement, or are they going to maybe look at it a couple of weeks before and it's like $2,000?
No, what happens is if on the closing date, which is usually when the payment's due, it's going to be, let's say that night they calculate and say, what is Riley's balance as of today? Now, if you paid it the day before, but you were like, oh my God, I forgot to pay my credit card payment, and you did it at night, odds are it's not. Now, it's going to show it's paid, but it's not going to reflect in the data that they're getting ready to send to the credit bureaus. So
I can hurt myself in that way.
You could, but if you do, understand it's just temporary. Because once it's paid off the following month, now, let's say they send everything out to the credit bureaus on the 1st. The credit bureaus do not turn around and update everything the next day. It can take sometimes 7 or 8 days for it to reflect on your credit report, which is where Credit Karma can come in handy, not to plug them, but it'll say, hey, congratulations, you paid off your credit card. Even if you only owed $50, it's just reading that here is a balance, now there's no balance. So you don't have to worry about that, and at least that notifies you of that. Now, let's just say you had all your credit cards maxed out, all 2 of them, and you were looking at finally you got yourself in position, you want to get a house. Well, you know, because of this conversation, that I should really wait until the balances are zero before I touch base with Mark. Okay. Well, you want to get an email alert or a text message alert from Credit Karma on behalf of TransUnion, on behalf of Equifax. And then what I tell everyone, go sign up for Experian.com/boost. That'll give you your Experian score absolutely free too. So now with that, you've got all 3 for free. For the data, not the credit score.
So while the pain could be temporary, like if you
maxed it out, yeah.
Yeah, well, it's temporary. It still does hurt.
Yes.
So, but it is temporary, just to know that. So it's not the end of the world.
Exactly. I mean, there's times that when I tell my customers, try not to go over 20%. But, if you're driving and all of a sudden your tire blows out and it's 2 days before payday, but payday is when you're paying or the day before payday is the credit card bill, you got to charge it up. It happens. It's life. It's not the end of the earth. I'd rather not it happen, but it's manageable.
Right. Like, what are you going to do? Not get a tire?
Exactly. I tell everyone, like, I've had people that literally 2 weeks after hiring me, they call me up. It's like, Wayne, I got to get a new car, and this is what happened. And I would say, look, we'll deal with it. If you're driving, you hear a bump, and you look in the rearview mirror and you see your transmission, it doesn't matter my instructions. You need a car. Yeah. You might not like the interest rate, but that doesn't mean once we get you fixed up, you can then refinance it and get a better interest rate because, they're really going to put the screws to you because of your score most likely, but it's not something you have to keep. It could be a year from now you refinance 6 months. As long as you can handle those payments, that's what counts.
Gotcha.
So let's talk debt utilization. So you said, I think it's the second biggest, 30%, right? So the same $2,000 for the car, transmission, whatever it was, we just made the analogy. If it's a $2,000 limit and you put a $2,000 balance on it, you're maxed out.
Correct.
How big of a difference if it's a $2,000 balance with a $20,000 limit? How much does that impact the scores having 10% versus the maxed out when it's the same dollars out the door?
Sure. Credit doesn't work on the dollar amount. It goes on percentages. So it reads a Macy's credit card that you owe that you have a $100 limit and you owe $90, as opposed to the $900 credit card limit where the $1,000 credit card limit where you owe $900. It's reading this card is 90%, this card is 90%. Now, don't get me wrong. If you start owing thousands, I'm quite certain that at some point the dollar amount starts to affect things, but ultimately they're looking at the percentages.
So lesson learned, cheap, free, easy, no cost way to increase your credit is to increase your limits and not get there under credit cards.
Most credit card companies typically, some do 6 months, some do 12. They're automatically going to assess your credit and then say, hey, has she been going buck wild and crazy? Has she been doing it good? Are there any late payments? They may just automatically jump you up regardless, but if they haven't, you can call them up and say, there's 2 options. You can say, hey, I just looked at my credit score that you provide, and I'm over a 700 credit score, and I make pretty decent income, and I only have a $500 or let's say $1,000 limit. Why is my limit not higher? And at that point, they'll say, oh, do you want us to run your credit? No, because you don't want the hard inquiry just to say, guys, just based on pure history, can't you bump me up 20, 30% just on my payment history with you? And most of the time they can do that as long as you would qualify. If you want to go from 1,000 to 5,000 because your credit score is great, you want that cushion. Hopefully you have the discipline not to use it just because you have it, but they would do a credit pull, and then at that point, it would be a hard inquiry, and then if you qualify, then they'll give you the much bigger.
How often do you think you can call to actually be successful in getting that increased?
Yeah.
In other words, Riley
That's what I was
says,
going to say.
Riley's, hey, here's your 500 to
Christmas is
800.
coming up, I gotta buy something.
Yeah, 800 to 1,000. Like they're not going to go, I wouldn't assume, from 500 to 5,000 overnight.
Yeah.
How often can you call to ask for that, do you think? Without wasting your time?
12 months.
Every 12 months?
Yeah. Unless if they, month number 6, that they bump you up 20%, or let's say month number 8, they bump you up 20, 30%. If you call them at month number 12, they're going to say, well, you already got an increase. So it wouldn't make sense to ask for one, even if it's going to pull your credit report, because their company rules, so to speak, might override that. So it's one of those, you got the bump, it's good enough.
That's what I was going to ask too, is like, how often could you ask? Because I go in on my app every now and then. It'll pop up sometimes, and I'll just it'll want me to update income and things like that. And so I will go ahead and put in, just update everything, like all my stuff on there, and it'll pull in and it'll say, okay, thank you. And then it'll let me know like maybe 2 weeks later that it's increased it. And it won't be by very much ever. Sometimes it's hundreds. But I like that it increases, because then my utilization percentage is a lot lower if I have a little bit more debt that month. Let's say I moved or something.
There is an old DVD.
I'll explain what that is later, Riley.
Yeah, I just dated myself on this one, at least with her. A DVD is a disc.
No, I know. I thought you were about to go as far left. I was like, what kind of DVD are we talking about?
No. It's called In Debt We Trust. And it's a really, really good breakdown on how credit card companies look at us, and you're just a sucker to them. And I'll give just a little second. There was a lady that was a professor that was from Harvard, that she was giving a presentation for Bank of America, all the big wigs, and she was explaining, if you just make these 2 or 3 minor modifications, you will literally eliminate 50% of the people that file bankruptcy on you. And at one point, all of a sudden, her name gets mentioned. Everybody shuts up, and this is on the video. So this isn't me saying this. Well, I mean, it is me saying this, but it's from go watch it. And she said, everybody shut up and turned around. She goes, that's when I knew that was the person in charge, the big head honcho. And the gentleman actually said, but professor, that's where we make most of our money from. The 2% of people, because they max out their credit cards, they get higher interest rate or higher finance fees, late payments, overages, and stuff like that. I have a friend that goes crazy with the credit cards, and her credit card company will, like with you, we'll increase you $100, because they know she's going to charge another $100, and then we'll give you another $100. And she pays on time, but she's just constantly putting herself in debt. But that video will scare you enough to the point where you're going to go, debt other than student loans, debt free.
But use credit.
But use it.
Use it.
Yeah.
Don't need it.
Okay, so that's the funny thing too. I always tell everyone, you see the Dave Ramseys that say, be debt free, don't have this. If I made 10 million like him, I probably would sell out and say the same thing. But the secret to this stuff is, in order to have a good credit score, you have to have debt. The trick is, no one ever says how much debt you actually have to have. You could have very little. And that's really where the trick comes in. But, credit cards are deemed, originally it was created as a leverage tool for an emergency. And then somehow, again, In Debt We Trust, you'll see more about that. Then they figured out, hey, here's how we can really get people. And then cause nothing but problems for people like me and Mark.
That's my homework. I'm going to have to go watch that. If I can rent it.
Stream it.
Yeah, I was going to say, can I rent it on somewhere, Amazon Prime? Or do I need the DVD?
You have to buy a DVD player first.
Yeah, literally. Well,
I think they got one in Salvation Army store.
I had my old roommate. I would always try to get her to use her credit card for everything, and then just pay with her debit card to pay it off, or checking, whatever. She didn't like to do that. She's like, I don't like to I don't want to pay a huge chunk of money at one time. She wanted to just see every single transaction coming out of her checking. I was like, well, you can do the same on your statement on your credit card. And so that's what I would do. I would just go through and use that for gas, groceries, everything where I am spending a little bit more money than like a meal down the street. You know what I mean? So I would do that, and then go in. Probably I do twice a month. I don't know if this is what I'm supposed to do. You can tell me as far as paying it off, depending where it's at. And she would never do that. So if I'm somebody who doesn't want to use my credit card, therefore I wouldn't have debt to look at, to have good credit. So how can you tell me that I should fight the argument that I should use my credit card for everything? Or am I wrong? Should you not be using it?
There's technically 2 sides to the story.
Oh gosh.
So,
why is that a common theme?
I'll give you an example. I have one of my large credit cards that's got just a really large limit. I use it for all of my monthly purchases. If you lose a credit card, then you're like, oh man, I got to call these 3 companies. I have to call more than 3 companies. So I pray that it never happens. But ultimately, I get points. So at the end of the year, I amass so many points that I get gift cards for all my nieces and nephews. Utilizing your credit card, this is where the discipline comes in. Like, she doesn't want to just she'd rather use her debit card rather than the credit card. Now, there's protection that you get when you use the credit card that you don't get with the debit card. And that probably would be maybe another topic, because we can go on for a little while on that one. But it's really going to depend on the individual and what you're comfortable with. If you want to say, hey, I've got a larger limit now on my credit card, I'm just going to charge everything, and at the end of the month, I just stroke a check, and then it's paid off, and I'm all good. And if you build up your credit and your credit limit starts increasing, let's say up to $5,000 after a year or so, or whatever the case may be, and you're only charging maybe $600 or $700, well, the balance is still, the limit's still small. You can still write the check, but it's where that discipline comes in, because it's very easy, and I know everyone listening to this, and God knows me too, where you just swipe the credit card, and then at the end of the month you go, I did not swipe that many times. And then you look at the statement, you're like,
I did.
Yeah,
I did that.
That is me every month.
Uh-huh.
My
it's
argument,
just so easy to swipe and then forget about the coffee
Exactly.
and the meal. And
my
Yeah.
argument, aside from the points, which I do think is substantial,
Right.
I've taken plenty of free vacations because of the points.
Exactly. That's what you should.
Long ago, I had every business expense on one credit card, and it was ridiculous how many points.
Like you
I
just
was.
won the lottery or something.
But aside from that, credit doesn't happen overnight. Like we've talked about, it takes a while to establish. It takes a while to be considered reputable, to where credit companies want to give you something. So yes, at 22 years old, 23 years old, your roommate doesn't need it. She might need it at 25. So my recommendation: use it just for gas. Why gas? Because I don't want to walk inside. It's the only thing where you can't just put gas inside the machine. So you might as well just use it as your only gas card, and then pay it off whenever you want to pay it off. But at least you're using it.
yeah, if some people are scared of credit cards, or their ability if they get a little too crazy. And I would tell customers that, sometimes they don't have the ability to qualify for a regular credit card, but we need to have them get one. We get a secure credit card. And I just tell them, okay, do you have Disney Plus? Do you have Netflix? And
What
they
is
go,
a secured credit card?
Sure. So a secure,
For the record, I know. Just
understood. I know
I
you-
don't.
I just don't want the listeners to
you
know.
knew.
I don't want the listeners to think Mortgage Mark doesn't know anything.
Okay, so Riley, let's say that you graduated from school and you kind of forgot and you didn't build your credit up because, hey, you lived at home, you didn't need any credit cards or anything like that. You did switch cell phone companies at one point because they weren't providing good service, even though the contract says service, nothing about good service. And you're like, I'm not paying you for something that I can't use. And they go, not a problem. You still owe us $400 on the phone. We'll just put that in the collections. Oh, yeah, termination fee, for your contract, even though we know with all the commercials, it's quote unquote, there is no contract. And then next thing you know, you owe $800. And then you try to get a credit card and it shows that you're like a 560 credit score.
Oh, man.
Well, maybe one of the banks, and there's 3-tier levels of secured credit cards. The bottom feeders, which are the people that you just want to hit with a car, or the companies you want to hit with a car.
My goodness.
And they're the ones that charge like a $75 fee
How do you really
just
feel?
up front. You know what? I'm really not a fan of them.
Who knew?
To say the least.
And then the bigger companies out there that'll actually say to you, even though you're going to give us money as collateral, we still don't want to do business with you. But then there's that second tier level that says, in essence, as long as you didn't screw us over and you don't owe us money, we're good. Let's work together. So you want to get a credit card because that's how you build your credit, but you can't get one. You're stuck. And we just had someone, I think you referred me, had that same exact thought process. And I said, well, the secure credit card is where a bank says, look, based on your score, we really can't justify just giving you an open line of credit where we're the ones 100% on the hook for the money. Tell you what, we got a secure credit card we can qualify you for. You give us anywhere from $200 to $5,000, and it's usually much more on the lower end. You give us $300, let's say. We're going to put it in a savings account. You're going to earn interest. I mean, if there's one decimal, I guess there's interest involved, but let's just basically say you're not getting any money on the interest. And then we're going to give you a credit card with a $300 limit. Now, when you get that credit card, it's used like a regular credit card. If you charge $100, we're going to send you a bill next month for $100. You can pay it off, or you can pay the minimum payments, whatever you want to do. So think of that as like, okay, I messed up. Whether it was because you didn't know any better, whether it was because life or you purposely screwed up, whatever, the story doesn't matter. Think of the secured credit card as a stepping stone. I'm going to take these steps and this is going to help me get on the path where then I can qualify for a regular credit card. So then you give them $300 and then you start using that credit card. Now, some people go, I got the credit card, but I haven't used credit cards in 5 years, or I'm just afraid of swiping too many swipes like we talked. Well, I tell everyone, do you have Netflix or Disney Plus or something? They say, well, yeah, I've got Spotify. Okay, I pay $11 a month. Okay, well, attach that to your Spotify. Stick the credit card in the sock drawer. And then when the bill comes in, you just have an alert on your phone that's just make sure that you pay that credit card bill because Spotify's automatically going to charge a credit card. Well, if it's a, let's say, $200 limit, well, it's using 5% every single month. It's getting paid off. Now, is it good to use it a little bit more here and there? Of course, but you work with what you got. Some people are deathly afraid of it. Here's how we get past that. You want to do this? Here's how we do this. So there's always, again, the joke where there's a will, there's a Wayne. We'll figure something out, but that's the way that you can start sort of either from scratch or start fresh, whatever the case may be.
So my recommendation too for the roommate or anybody starting out, Caroline and I did 2 credit cards when we got married. Mm-hmm. We had hers and mine. And one was for all essentials, gas, groceries, whatever it may be. The other one was for fun, going out to eat, travel, whatever it is. Well, when you do a household budget, you don't need to watch what you eat, what you spend gas on. You're going to do those. So all we had to do is monitor just the fun stuff. So it just makes it real easy, not just from a using credit, building credit, but it also just from a budget standpoint, you only got one thing to look at.
It's one card to worry about.
One card, like, holy smokes,
yeah.
we ate out 8 times this month, and it cost how much?
Exactly. You know whether like you need to cut back or not by
Yeah,
separating
we've done
that.
podcasts on budgeting. That's the easiest way to do it.
Mm-hmm.
Just a fun card. Anytime you're doing anything fun, put it on the fun card.
And I've seen where people nowadays, when they are getting married, they get a wedding credit card and they'll do all their wedding expenses on that, and then they'll get points for travel and stuff like that. So like you were saying, Mark, this is the best pro of it. That's why I tried to beat into her skull. You get points, you get cash back. It's like free money. Why wouldn't you use it? But like you said, if you don't have the discipline for it, then that could be where it gets really scary.
And I've seen that, what you tell me, Wayne, but I see it after divorces. I've seen it basically anytime somebody has gone into credit issues, whether it's due to medical reasons or divorce or just irresponsible, learning life the hard way, they're then shy from credit. They don't want to do it. So I love your idea about the Spotify. Just get a card, put it in the drawer, set up auto pay.
Simple.
Hopefully you can afford the $11 that's going to hit your account every month. Right? So just the lowest form of just set auto pay and just set it and forget it, and you're using credit.
Well, it's like when we talk to, when we have some customers and stuff like that, you send my way, it's like, hey, Wayne, they've actually been screwed over by 1 or 2 credit repair companies in the past. And, and the joke, oh, have you ever been to a bad dentist? Yeah, so you stop going to dentists, But that's kind of the joke for that one. But you just have what I call credit repair scar tissue. You kind of got taken advantage of. Then I'll ask, hey, what sort of research did you do on the company? And most of the time it's none, and you guys, when you recommend me, you say, look, here's Wayne's bio, go research him, check him out, and then call him and then see if how the conversation goes.
For the record, I'm just direct. I say, do not waste your time. I don't give him a bio. No. I just say, if you trust me, you're going to trust Wayne. And there's nobody else. I would ask the question, how do you know a good credit repair company versus bad? It doesn't matter. Call Wayne. This isn't meant to be a commercial, but it's a commercial. Right. Just call Wayne.
I'm glad I sent
Here's
you
your
bio.
advertising.
You're welcome.
Yeah, I'm glad I sent you the bio.
Yeah. Yeah. Tell me this about hard inquiries. So as a mortgage guy, I get a ton of, don't pull my credit because it's going to hurt me. Mm-hmm. Fill me in.
I literally just had a gentleman, I have nothing but stories, so I'm definitely fun at a bar. A hard inquiry, there's 4 types of inquiries. The biggest one that concerns everyone is when a company pulls your credit with the intent of loaning you money. Okay, so there is something called that we all know, which is a promotional inquiry, which is, and you don't really see this, it's identified unless you get your credit report directly from the credit bureaus, and it's on 1 page, or actually sometimes 2 or 3 pages, and you may see 200 inquiries, and you may just almost have a heart attack. But if you notice, it'll say these are only seen by you. These are companies either that you currently do business with, people that realize that you were living, breathing, and they wanted to send you say, hey, you've been pre-approved. Now, I will, on the pre-approval part, that's what a promotional inquiry is. I remember back when I almost first started getting involved in credit. This had to be 2003, maybe 2004, 3 to 6, somewhere around those range. This is where if you were breathing, we're going to give you a $5,000 credit line.
Holy.
Those were the days.
That's where you had to work out when you went to your mailbox because you were bringing so many stacks of, hey, you've been qualified and pre-approved.
Where are those people now?
They're I think they're in San Francisco in those tents. But a guy got so tired, and this was on like ABC Local Dallas. He got so tired of getting these credit card statements that he filled out an application with his dog's information. And I kid you not, his last name was Johnson. The dog's name was Rusty. And he showed a credit card. I'm not going to say the bank. They blurred it out, but you knew who it was. And it literally, he showed that it said Rusty Johnson, credit card with so-and-so bank. And it was the funniest thing. But they were just, and surprisingly, that happened a few years later, the mortgage meltdown. But I lost my train of thought there for a second. The hard inquiries are what hurt you. Okay. Now, what's really funny is, and we've had this over the course of the years, when you talk to a customer and they're like, oh, I'm like a 560, 570 credit score, they're the ones that are like, oh, I don't want my credit pulled because it's going to hurt my score. And sometimes I got to go, listen, I don't want to sound rude. You've got a lot more problems than just one hard inquiry may, because it doesn't necessarily hurt you. Because if you think about it, a credit score, it's designed for people to check on it. Now, over-checking it is a little too much. If I had a customer one time, he was a blank file 0. He might have been really unfamiliar with the finance world in general. Let's just say that. He went to a car show, and he got all these cool hats and T-shirts and all this merch and swag, as I call it, and all he had to do is fill out this credit card application. Doesn't matter if he got approved, he's still going to get the T-shirt and stuff. Well, I had sent him the information to get a secured credit card, and he got declined. And I'm like, how is this possible? Well, we pulled his credit. There was 20 credit card inquiries in one day.
Is his name Mark?
Yeah, it was me.
No.
I did that in college. I got 7 T-shirts on one Friday.
Okay.
7 different credit card applications.
But perfect example is even the secured people. It looks, if you look at it from a lender's perspective, okay, so one day this guy applied for 20 plus credit cards. This guy must be desperate for money. There's a huge you want to talk about red flags.
Red flags.
This was a giant one. And he got declined, which obviously caused problems. We had to wait several months. So it's designed to absorb 1, maybe 2 inquiries a month without much of a problem. Anything more than that, a lot of times it looks like you're being desperate for something. You're trying to get money. Why? That could be a red flag.
Does it matter what type of inquiry it is in terms of the debt you're going for? Credit card versus mortgage versus car?
Not that I've seen. Okay. No. Like we always tell everyone, we'd rather you not have a credit report pulled, depending on whatever lender. Like, for a couple of reasons. If they tell you that their Credit Karma is a 570, it makes no sense for you to pull their credit because you know they're going to be like closer to 520, 530. Just talk to Wayne. Wayne will walk you through the rest on that kind of stuff. And then I'll send them to some sites. And, over the course of the years, I'll say, go to these 2 or 3 consumer sites. I can kind of interpret, hey, this is what your score is. So this is what your mortgage score is going to be within 5 or 7 points. And then once we finish up, we'll look at that score and say, okay, well, hey, we jumped you up 87 points. So you're probably about 70 points higher. We do the math and say, you're at tier level 2, better interest rate. Go contact Mark now. Send me the report. And then have them send you the report. And then we'll take a look at it from there to assess it.
So it doesn't matter, because I've seen a guy with 38 credit pulls in 1 week shopping for a mortgage.
Okay.
And he had an A++ credit.
A little different. So yeah, so switching back to that, when it comes to inquiries, okay, there's 2 types that get special attention. Credit cards are just straight up, yes, that can hurt you, because they clearly say, if you want to apply for this, here's what we charge, here's our interest rate, here's our fees, yes or no, do you want this? With a mortgage or a car, it's the score and the interest rates it's inversely proportionate. It's like a seesaw. When one's higher, one's lower. So therefore, if you go on the first and you pull credit, okay, on them, if they want to go to 3 other companies, as long as it's within using the scoring model that they're currently using, as long as it's within 15 days, it might look ugly. Like when you go to a car dealership, they shop you. If you're not A+ credit, they shop you to 25 different lenders. But it only counts as 1 hard inquiry as long as it's done within 15 days. Now, again, looks ugly when you get it on paper and people get really mad. But from affecting you, it's only affecting you by, sometimes maybe 1 or 2 points. I've seen some people that go, oh, all these inquiries, it dropped my score 30, 40 points. And I go, yeah, that's probably not the reason. Why don't you send me the 2 reports? And all of a sudden I find 4 of the reasons why the score dropped.
Yeah, same thing here. Reality and what should happen, 2 different things sometimes.
Mm-hmm.
But for me, it's about a 1 to 3 point variance.
Yeah.
Anytime we pull it. And when I first got in the mortgage business, I would be the us wholesale, which doesn't matter. Like brokers would send us stuff, and I would be the 20th person pulling credit, and it was the same, like 1 point difference from the first one. So it is about 1 to 3 points what we've seen, and it's 15 days. Was it sometimes 30, 45? Does it ever change?
There were two models. One, and they kind of switched from it from what I've seen. It used to be 45 days, and then it went to the 15 days. And then, but usually if it was going to affect you, sometimes it would not affect you for up to 30 days, but that's from pulling, reporting, and all that fun stuff.
Do they stick around for how long? 120?
2 years.
2 years.
Yeah, if it's going to affect you, it's only going to affect you for the first 6 months. After that, it's just natural. A lot of time, I want to say they just naturally fall off, but in my experience, that doesn't always happen. So we just remove. Again, when they're that old, they're kind of insignificant, but we just do it more of a cleaning things up.
Yeah, for us, when we pull it, we see the last 120 days for the inquiries.
Yes.
So
Right,
from a mortgage side, we're going to bug you to say, what was this for? Because we're going to ask, hey, that BMW inquiry, what's it for? Oh, it's the new Beamer I got out front, right? Versus, oh, I was just shopping, nothing happened, no new credit.
Yeah.
So,
and just the standard thing I always want to tell people, especially for your people that are listening, if you're getting ready to purchase a house, do not get a car the month prior to getting a house. We just had that with a customer of ours, and it just completely screwed him over for the house, and he didn't understand. And
sage advice.
Yeah.
Sage advice.
I will say, people don't teach you these things.
No.
The same with like anything about credit. You're not taught
Isn't
these
that
things in school.
ridiculous?
At like such an
Nowhere.
impressionable age, you're not taught these things. So then you go and you screw up and you do things like that, and you're like, I didn't know.
I was
What a-
raised by
what
a
a-
woman who was in the mortgage business, and I got a credit card when I was 16. The first month that came in had $1,000, and I worked at Albertsons. You getting paid, I think it was like $5.15 an hour, and I had $1,000 balance on it, and I was like, F.
Heck yeah.
I was like, what? I was like, geez. And I just remember thinking, I can't pay for this.
You're like,
so
oh no.
my introduction was my mom just says, how are you going to pay for it? And I go, I don't know. So it was a lot of overtime.
Can I
and
borrow money from mom?
pretty much. So that was my lesson on credit. But to the point, I'm very, again, thankful and pleased now in life that experience. But to your point, Riley, it's not a
No
thing.
one.
So if you guys have kids out there, start teaching them about credit, right? And get them involved early.
And here's a perfect plug, Riley. When we finish, I'll get your information. I'll send you a copy of my book.
Okay.
Love
That
it.
sounds great. That
You
sounds
too
great.
want a copy. How could they find a copy of that
Yeah.
book?
Well, I mean, okay, so
What's it called?
Shameless plug. It's called The Real World of Credit, and the tagline is "Don't hate the creditor, hate the credit game."
Love
So obviously, look. This is just how it works. It's not a book that shows you in its full-blown color, 8x11. It's like 124 pages. Each chapter is maybe 2 pages because I can't stand that. You know, when you read something and you're just like, wow, this was great 32 years ago, but they put it just to make it more. It's just 2 pages for sort of the ADD society that we become. After a page or two, you just kind of
For
lose your
sure.
focus. And it just shows you how the system works. Not, oh, this is how you fix stuff. So if you're going to buy it to say, this is how I'm going to fix my credit, you're going to be mad. If you want to get it to understand, oh, so that's how that works, or I didn't realize that, or I'm not really grasping what he said just earlier, odds are I probably went over it in the book.
If you got a 16-year-old home, this should be your
A Christmas
prerequisite
yeah.
for if you want to drive, you read this first.
Yeah.
Because about 16
Yes.
years old, when you get a job, this is what you need to know about credit.
I was
I
going to say,
agree.
like, until they, take away the PlayStation or the Xbox, until they read the book and
Totally.
can actually understand it.
Totally. I love it.
I like that.
Wayne, tell me about medical collections. What happened? So recently in the news, there's this big old thing. Tell me what's going on in that world.
A lot of crazy stuff, a lot of good stuff. They finally figured out that, hey, you didn't apply for anything that would go to collections for your credit.
When does let's push pause. When does something go to collection first? Is that a question you had, Riley?
Yeah, kind of like
I'm reading your
backtrack,
mind.
yeah.
What is a collection? How does it get there? Let's restart.
Sure.
Wayne, tell me about collections. What are they, and how do they get on a credit report?
Well, for medical collections, what happens is, okay, getting back a little bit here, the medical industry. Now, while we're talking, people don't know this, I actually ripped one of the quad muscles off my kneecap. So I just recently had surgery about 2 months ago. So I can literally tell you from experience now that people have probably gone through. I know exactly what you're talking about. Let me explain. So the medical industry, it's a business. Insurance companies know that hospitals overcharge, so they underpay. Hospitals know that insurance companies underpay, so they overcharge. And then when you fill out all that fun paperwork, you're the one that says, I'll just make up the difference in the middle, which is just never good, So, and the billing, I mean, I'm sure if there's any medical billing people, I'm sorry, this is just a general topic. It's not directed at you.
Click out of this.
Like, just stop listening for 10 seconds. The billing system is very poor. After 120 days, now this was in the old days, so we'll talk about what used to happen and what's changed, and then now what's currently going on with the twist or two. After 120 days, if that bill wasn't paid, whether you were told or not, it went to collections, and then a collection company is calling you up, sending you a letter, say, hey, you owe this money. And it's just like, well, nobody told me, and then you pay it. Okay, fine, I'll pay it, and they would just mark it as paid. Now it's on your collection, on your credit report. Well, if you had a perfect credit score and a collection popped on your credit, you might drop 80 points. Well, it's paid. Well, then you may go up 40 points. Now you're still down 50. And needless to say, it aggravated the heck out of people. So back in 2017, they made a law that said, hey, this cannot go on your credit for 6 months. Which, if it goes to collections, well, then that gives you 60 days to kind of figure out with the insurance company, what'd you mess up? What do I actually owe? Oh, I thought insurance covered everything. No, this is your copay. This is what all that stuff that you just want to strangle people when you listen to it. But that gives you 2 months to be able to pay it or settle it before it can go on your credit. That even became an issue for a little while. So the newest laws that came out, and it was taking effect July 1st, was going to be any medical bill that you paid. Once it's paid, it comes off your credit. Now, it may take 2 months for it to come off, but it'll come off. And then there was a new one that they said if it's under $500, it's not getting reported, which was fantastic. And then, but I've seen lots of medical bills that were like $490, $472, and I've been sort of, let's just say there's collection groups that talk that I'm snooping in on and spying under different names on like fake accounts because my thought process is there's a lot of companies that focus on under 500. How are they going to get past that? They're not going to shut down their business. Well, are they going to talk to the medical people and say, well, we need to start instituting the legally allowed interest that we're allowed to charge? That can charge, we're going to add our fee to your bill. That takes it from $420 now to $475, and then luckily with 3 or 6 months of interest, whatever the case may be, because now they can't report it for 12 months. Now, after that time frame, it'll be $502. Now we can force them to pay it and so on and so forth. Well, that at the last second, they said, you know what, we'll do that starting in 2023. So people that were waiting for things just to fall off naturally and organically, now you have to wait another 6+ months.
Talk to me about collections in general, why they keep showing back up. So in other words, I forgot to pay, or I didn't pay a credit card bill because it doesn't matter. It's my ex-wife's, whatever the story may be. That's her debt. I'm not paying it. It is what it is. And this $2,000, let's say $500 collection, credit card goes into collection. Mm-hmm. Here it is, 6 years later, I'm trying to get a home. All of a sudden, shows back up like it's new. What's happening?
Okay, so we'll backtrack a little bit for something a little bit different. Let's pretend it's a cell phone.
Okay.
There's people that'll say, well, this was on my credit and it came off and now it's back on. Well, these companies, they have more than one collection company that works for them. So it's just like with several of your builders. You guys here are a preferred lender for several builders. You're the go-to ones that they trust. Okay, they have collection company A. That's their main company. So for the next 6 months to a year, you get prime opportunity to try to collect this money.
They want all $500 in this example.
Let's say, yeah, the T-Mobile they're collecting behalf of for $500. So ABC Collections is in charge of trying to get that. They post it on your credit. After 12 months, if they're unsuccessful, it has to go back to T-Mobile or whatever company it may be. And then AB 123 company, collection company, the tier number 2 guy, so to speak, then gets control, and then they post it on your credit to try to collect the funds and make phone calls and letters and do whatever. But the first company has to legally remove it because they're no longer in charge of the account. Now, sometimes it's pure clerical error that they're both on there. It's a simple phone call that they'll end up removing. You know, they might be a little slow, but they'll go through the steps to get that removed. So you hear people that say, well, it's on, now it's gone, now it's on, now it's off. Well, most of these companies have 3 or 4. So if you find out that account's maybe 5.5 years old, well, odds are that collection company is the last one. That was the one that was scraping the bottom. So once we get that sucker removed, it's never coming back. Now, can it? Technically, yes, if it comes to another company, because that company makes their own account, has their own account number with the bureaus. They make up their own account number for that account. So as far as the credit bureaus are understanding, it's brand new data. So that's how that one. Now, when you get divorced, which is a huge one, and the spouse says, hey, there's all these late payments on the house, on the car, the credit card, whatever the case may be, the divorce decree says she's the one in charge or he's the one in charge of paying this, not me. You need to fix this. Well, the judge says, look, not the judge, the credit card company basically, wait, I'm messing this up. Sorry, guys. A judge cannot supersede a legally binding contract. So the bank says, I don't care what the judge said. I made a contract with a legally binding contract with this Social Security number and this Social Security number to pay this. If you don't pay this, this is what happens. If they said they're responsible, don't care. You should have refinanced it out of that person's name and then do that. Like, I can't tell you how many times that I'm shocked that divorce attorneys don't put that in the paperwork where they have X amount of days or a year or 2 years, whatever the case may be, to refinance it out of that person's name. Otherwise, this is what's going to happen. And it's such as a constant problem. It's mind-blowing. Did that answer the question? Because I went off on a tangent.
Yes. No. Okay. So in other words, collections can show back up. So in other words, if you don't pay it and it goes away, you're not necessarily just out of the woods.
Correct.
And so when it shows back up, can I negotiate and say, collection company, I'll pay you your $500, but I want this gone forever in my report? Because there's a difference between paying a collection, to where it's going to show on your credit report collection, paid, balance zero, versus I don't want it there. Is that something you can do in today's world?
It's called pay for deletion.
Right.
90% of companies do not do that. There's 10% that do.
Obviously,
now with medical, so you're telling me there's a chance. Medical now, that's going to be an always yes, as long as it's paid due to these new law changes, which of course is great. Now, what I tell everyone is, and this is more for you, Riley, from a grasping of understanding this credit stuff, think of your credit report. It's our adult report card. How you did in sociology, science, math, and all that fun stuff that I completely forgot and don't want to hear about ever again, is how you worked with the Department of Education, how you deal with Capital One, Bank of America, and Lending Club, or whatever the companies' names are. So it's our adult report card. Everything that's paid perfectly on time is a code 1. A charge-off, a collection. Now, definition of a charge-off means you just said, I ain't doing this no more. After 6 months of non-payment, they legally have to charge off the account. So have you ever heard that after 7 years, a bad account has to fall off your credit whether you owe the money or not?
No.
Okay, so there's a rule that says you can't have this on your bad credit. The bad credit can't stay on forever. Okay, barring the bankruptcy stuff, that will be a little more detail. After 6 months of not making any payments on credit cards, they have to legally charge off the account, which means they're allowed to take a tax break, collect insurance, or get whatever extra money they can from that. But they can still say, you still owe us the money even though we got a break. And then we'll send it to collections. Or in the state of Texas, now every state's going to be different. So when the account gets charged off, that lender has got 4 years where they could turn around and sue you if they want to. Or they could sell your account to some of these debt buyers out there that bought it for 2 cents on the dollar. So they spent $20 or whatever it is for $1,000 plus account, whatever the case may be, and say, hey, Riley, you owe us $1,000 because we're the new owners of this account. You're going to pay it? I can't. Well, we're suing. And then you're like, well, blood from a stone. I can't give you the money because I don't have it. Yeah. And they go, that's nice. We don't care. And then they sue you. And now you have a judgment on your credit, and you could have $50,000 to put down on a house with Mark. You could have a 750 credit score, and the lawsuit could be for $500. No bank is going to loan you money because a judgment supersedes the first lien position of a bank. Super duper fancy talk for the bank goes, you got to pay that before we do anything with you.
So what do you do in that situation?
You got to pay it. Well, I have people that people actually reach out to me because if you ever go to WayneTheCreditGuy.com, click on blogs, you can tell that I cannot stand debt settlement companies. I hate them beyond all levels that we can come up with. I can't stand mostly credit associates. And I'll just say their name because I don't care. It's my personal opinion. I trash them constantly, but just the industry as a whole, they go, because you see the commercials, and they say, oh, we'll save you half. And I'm not talking about one specific company at the moment. We'll just say, hey, if you owe $10,000, we'll get it down to half. Well, I get a lot of people that talk to these companies have never seen that. But they charge 25% on top of whatever they get. So if they only got you 60% and they charged you 25%, well, then you only got a 15% discount. And what they don't tell people is, oh, during the course of this, you could get sued. I mean, it's in the fine print, don't get me wrong. So it's always in the fine print. But they don't actually tell you that majority of the times. There's some good salespeople, a lot of bad ones. So, I'm skirting around any possible lawsuit right now. Again, just purely my opinion.
Purely opinion.
So I've helped people. I had a gentleman, this is the third time his wife has charged $80,000.
The third?
Yeah. What?
That we're going to stop. We're not going to go any further than that.
This is that $10 million guy you were talking about earlier.
No,
$2 million guy.
Nope. But we're helping him with that, so he's probably going to end up settling and saving about $40,000.
Wow.
Yeah.
That's
Again,
incredible.
my recommendation is if you have any questions on credit, call Wayne.
It's 10 second phone
before
call.
you do something, right? So I do have one last just generic question. Credit locks, to lock your credit, to freeze your credit. Should you, shouldn't you? How do you do it? What's your best advice on how to do that?
If you're a victim of identity theft, when you file an initial fraud alert, it literally does nothing. People can still inquire on your credit. I don't understand it, but that's at the bureau level and how that stuff works. If you're a victim of identity theft, which I've had several customers, we fix them up, and then I tell them, let's get you to freeze your account. So think of your credit report like a book. The book's closed. When you put an initial fraud alert, and this is just what I've seen through my experience, it's like putting a rubber band around it. You can still kind of open it, right? People can still inquire, and I don't know how that's possible when it's alerted like that. Either I have to find the people that there's always slipping through the system, or just something funky's going on.
I will say, when we pull credit, it will say like fraud alert. So to me, your book analogy, I would say it's just a yellow
still
post-it.
got it.
It's a yellow post-it note on the book. It just says fraud alert. Okay, fine. I still can open the book and see what's there. I just have a yellow post-it note.
Correct. A credit freeze is basically where you're putting a clamp on it, where you can't open it up for nothing until you actually open it up. It's free. It's super easy to do, and these days, it's been a while, but you could probably do it through an app. And I actually helped a friend where I had to go online, because I don't know if she had the app or not, where I had to unlock it for her because she was going through some job interviews and they were going to pull credit. And they said, hey, she did it without telling me. And then they said, we can't access your report. So they couldn't see anything on her. So with the credit freeze, it is locked solid. You can change it within a day, and you can punch in the system, hey, keep it open for 3 days. Let's say, hey, Riley's finally going car shopping, and she's got her credit, the credit account's frozen. It's a mild inconvenience, but it's not a bad one, because as long as you have a day's notice, you can go online, unlock it, leave it open for 3 days or 2 days, your choice, and then lock it right back up once you're done. This way you're always safe, where you never have to worry about anyone seeing anything they're not supposed to.
Okay, so if the only reason why somebody would want to lock their credit is because of identity theft, or is there other reasons?
Straight
why?
up paranoia.
Just so
paranoia.
that no one can see anything,
Correct.
basically. It's not locking your credit score, is it?
No, it's not locking the score. If you have accounts that are reporting, that's fine. You're just stopping people from
Seeing it.
locking
Applying
applying
for new credit
Correct.
as well.
Gotcha.
So you can't have somebody come by. So we had friends that were victims of apparently people wait in the neighborhood. Mail comes in. They just go to the mailbox after the mail guy turns the corner. They look for credit card applications.
Mm-hmm.
They'll take it, fill it out in their name.
Holy.
But then when it comes to that address, they go back and they check the mailbox for the credit cards in the mailbox before the homeowner
I
gets
can't
there.
believe the Ring camera caught me. No, I'm just kidding.
That's a thing?
Yeah, that's basically because
People.
There is
I think,
so much
I
shady
think
stuff,
it was
Riley, I have
Ring
no
camera.
clue.
So to be clear, a lock and a freeze, same?
No.
What's the difference?
A lock credit freeze is a lock.
Right. So they
yeah,
are the same.
That would be considered exactly the same. Yeah.
So my experience has been Caroline once had her tax returns done.
Mm-hmm.
She's one of those lucky ones where somebody went in and filed tax returns on her behalf and claimed like $50,000 refund, and they got it. Good for them.
Jeez.
So for that reason, I'll tell you what, guys, we've had credit cards stolen multiple times. It's annoying because you got to fix all the auto drafts,
Yep.
et cetera, et cetera. What I'm about to describe is a pain in the butt. To freeze and lock, we use the app. So I downloaded each one, TransUnion, Equifax, Experian, and they allowed you to lock it, unlock with the app. So I was like, this is really cool. Everybody should do this. After, call it a week, a month, I don't know what it is. Hey, you got to pay us for this privilege of being able to do this. It's free to do, but whatever the app was at the time.
Was it $10?
Something like that. So disclaimer, this is 2 years ago, 3 years ago. I was like, you know what? It's not worth it. So then I had to have my credit pulled. I had to call. It's a 20-minute hold. It's like, hey, please unfreeze this. And then they call your banker and you're like, okay, it's from frozen. Like, no, it's not. And you have to call back the next day. It's just a pain, but it beats the pain of having that fake credit card and dealing with all the other stuff. So I highly recommend lock your credit. Just prevent somebody from actually getting access to it. That 20 minutes of inconvenience is certainly worth the hours you're going to spend if somebody wrongfully pulls your credit or gets access to something in your name.
And I can say this from personal experience. If somebody gets a credit card underneath your name, you can't call up the fraud department and try to coax them to get the address where the credit card went to pay them a visit. I tried that with PayPal.
I like that.
And there was somebody in the colony. I'm like, you sure? Was it North Colony Street? I was like, come on, you can watch the news. I'll make it fun for you.
That's fun. I have one last question not along those lines, but more solicitations. The credit companies sell your information.
Yes.
So when you get your credit pulled, they sell your information. How do they prevent that?
They don't.
Okay. What is optoutprescreen.com? Legit? Not legit.
Yeah, no, that's legit. That eliminates the pre-qualification mail, email that you get. If like the old days when we talked about back in 05 or 06 when you would just get stacks of pre-approved offers, that would limit that down and limit other companies that send you magazines. Like I bought one thing from some magazine 7 or 12 years ago, and then Uline. I don't think I've ever bought anything from Uline, and I got a 300-page catalog just like 2 weeks ago. That's one of those things that would stop that.
So if it doesn't necessarily eliminate it, but it will reduce the amount of
mail that you get.
Junk mail and just what they can and will do. And I will say from a credit piece, and if there's any lenders listening, my group will go, instead of pulling through our system, we'll go directly to our credit provider. We'll go directly to their site, and we'll take out the phone numbers and the email addresses. So in hopes that they don't sit there, because once your credit gets pinged, from a mortgage company, if people will buy it, the creditors will sell that information. So then you get hammered from people in the mail, on the phone, and email saying, hey, we saw your credit's pulled. We can help you buy the house. So one, we just don't want them thinking we're selling that information. But I'll tell you, they're getting good because we remove the email. We remove the phone calls or the phone numbers, and they're still being contacted.
They do still trace, yeah.
It's unbelievable.
So one of the things that I do when I have customers go online and they go to a consumer site, understand that it's just like that whole thing with Facebook where they said it's free because you're the product. This is the same thing with the credit bureaus. So I send somebody to a consumer site, and then they say, okay, well, with this one site, it's like, hey, you need to update us with your phone number. You can't get in until you put in the phone number.
Right.
I always change the number because what happens is the credit bureaus sell what's called trigger lists. And they sell that to collection companies and creditors that you owe money to, because they're always trying to find you. And if you move, some people move 2-3 times. I mean, it happens. Well, the information is not the same. So if they log in to the reseller and here's my phone number, here's my current address, well, a lot of people go, all of a sudden they started getting phone calls, they started getting collection letters to their house. Like, well, how did they find this? Because you gave them all the information. Now, getting the address, that's normal. To get that, but you don't want to give them the phone to be able to have them possibly harass you on the phone. So I always change the digit, just by one, just to prevent any phone calls from stuff like that. But they do sell that. So when you go, Riley, let's say you owe a bunch of people and you go to try to apply for a mortgage. Well, there's a trigger list because most people, it's not like 2005. You need money to buy a house. You need money to buy a car. And there's certain inquiry alerts that say, hey, she just tried to buy a car, or she just had an inquiry on the car. Here's her contact information. Go get her. It cost you 10 cents or whatever the case may be for the millions of people that they go after. So now they have updated data on you now to come after you to try to get paid.
Is this how they're giving me my cash back? Is because they're selling all my info?
It's possible.
And getting paid for it?
Yeah,
they're just returning me the favor?
That's an interesting way to look at it. So it's not really cash reward points. It's like, well, listen, here's a little something, because we
just sold everything about you to everyone we know.
An inconvenience fee.
Yeah. Needless to say.
It's quite possible.
Well, Wayne, thank you for joining us today.
Yes,
you can find Wayne, the credit guy, also known as Wayne Sanford by his birthrights, but creditbureauinc.com. Is that the best way to get you?
Easiest one to remember is WayneTheCreditGuy.com.
WayneTheCreditGuy.com. That's
Yep.
the best. Well, thank you for joining us. We've well run over probably a lot of time we gave, but it was worth it from us. So thank you for joining us, Miss Riley. As always, thank you for being here.
I'm so glad I learned a lot today.
Take care, guys.
Thank you.
Bye, everybody.